The so-called final C price floor for XRP is the subject of numerous rumors today. These rumors are circulating right now. The media has publicly said that the SEC's long-running case has been fully settled, and the settlement now provides a minimum value of 50 for each token. People are simultaneously buying XRP and engaging in social media speculation. It seems that there is a general consensus in the cryptocurrency community that the price of XRP is at a point in time where it will never drop below 50, because it marks the end of uncertainty, the end of regulatory risk, and the start of a new era where institutional trust can finally flourish. The final SEC is highly significant to investors, a final agreement. Exciting possibilities that have been imagined include Wall Street insiders rejoicing behind closed doors and a set price that swiftly turns XRP into an irresistible asset, just visualizing a courtroom empty of people, with handshakes for transactions and ticker charts flying through the air, is sufficient to reinforce the notion that one has accomplished rapid financial success. In actuality, though, it is clear that the claim that there is a 50 floor is more of a fabrication than anything else. Even if the SEC lawsuit is approaching crucial stages of resolution, there is no chance that a settlement will formally set a minimum price for XRP. The regulatory system does not function in this manner, and the number that was given is unsupported by any information in the public domain. When it comes to an undefined market, the 50 sum is really a fallacy that has been spread on social media. The human need to know for sure and spectacular news are also factors. This does not, however, mean that big organizations do not trust XRP or the ecosystem in which Ripple functions. In actuality, the events that have been witnessed occurring on Wall Street are the true story. It is estimated that big businesses like Citadel and Fortress have contributed roughly of the $40 billion total cost. Knowledgeable institutional actors believe that XRP is a network asset and Ripple's long-term value, as evidenced by this specific, for example, this trust-based investment, rather than a judicial settlement, is what really represents the price floor. Industry experts are wagering hundreds of millions of dollars on the platform's capacity to grow, become the most popular, and become the most technologically advanced platform. It is easy for the typical investor to get bogged down in the excitement. The idea of a fixed price floor connects with people's brains so they can relate to it. One gets a sense of comfort from the idea that the market has been backed by the government's choice to shut down and that there is very little probability of a loss. On the other hand, the real indicator of the market's performance is not speculative news stories, but rather the acts of financial institutions and strategic investors. This creates a real-world foundation of trust by showing that knowledgeable market participants are risking actual money. These big businesses are clearly investing as seen by their $500 million investment. These are not small-time merchants. Instead, they are experts in their field, invest with the resources to make decisions fast, the ability to perform extensive research, and access to insider knowledge. Due to their belief in the potential of the token to operate as a bridge asset in cross-border transactions, the growing usage of the XRP ledger, and the strength of Ripple's technology, they have shown that they are dedicated to the project. This type of institutional support is far more significant than a fictitious price floor of $50 when it comes to the market's long-term stability and growth potential. Furthermore, the court settlement is important. However, it would be more accurate to think of it as a catalyst rather than a price-setting event. Any ambiguity would be removed, any arising legal issues would be resolved, and everything would become clear for everyone engaged in the institutions if a good resolution were made. One of the main things that has kept institutions from investing in this technology is uncertainty about its legal ramifications. These less risks are really beneficial. After the problem is fixed, it is anticipated that financial major investors, payment companies, and institutions would be able to use Ripple's network more quickly. A far stronger foundation for price stability is created by the integration of this technology with the strategic capital already being added to the ecosystem, rather than by any massive amount. One may argue that a floor's tale, which is sure to bring in 50, is a metaphor for a deeper truth. Institutional use, strategic investment, and the realization of the technology's full potential are the main factors driving RP's market value. Before making a purchase, the Wall Street viewpoint on business is to be honest and helpful. Businesses like Citadel, Fortress, and others are known for carrying out a thorough quantity of research. Additionally, they are interested in investing in assets with scalable, transparent infrastructure and future growth potential. Their strong commitment to Ripple indicates that they have faith in both the company's deliver and the XRP ledger's ability to handle more transactions, exchanges. Unlike retail speculation, this amount of investment really increases market liquidity and creates opportune alliances. The floor is raised because it is more advantageous for business, not because it is mandated by legislation. Professionally experienced investors have assessed the technology's possible risks and decided to invest hundreds of millions of dollars in it. The market now has a far stronger base on which to establish confidence. This type of acknowledgement keeps progressing and transmits a message to other significant market participants that XRP is now a legitimate digital asset with a lot of promise rather than just a speculative venture. The difference between hype and reality is, to put it mildly, fascinating when views of market psychology. The idea of a 50 floor generates a lot of traffic and discussion on social media and a notable boost in short-term trade spikes. Lower-level players are drawn in as a result of the emotional feedback loop that is created. However, the existence of verified institutional investment highlights the rational aspect of market behavior, showing a direct road to long-term acceptability and, ideally, steady price growth. this is a really positive indication. These two forces, the thrill of speculation and the sanity of professional investment, have an impact on one another and work together to drive cryptocurrency markets to new heights while also maintaining their roots in the real world of technology and finance. People are better equipped to make decisions that are in their best interests when they can distinguish between the signals and the noise. Interests. They are able to take advantage of the real structural growth taking place in the environment rather than succumb to hype, though not in the clear-cut way that the 50-floor story suggests. The outcome of the SEC case is likely to be a major event for the market in the future. If the outcome is positive, institutional strategies are reinforced, legal uncertainty is removed, and more people are encouraged to join the XRP ecosystem. This creates a reasonable baseline for growth that is much more reliable than any speculative floor pricing. This commitment is in addition to the $500 million in strategic investments that have already been pledged. The real lesson that traders and purchasers should learn from the news is this: even if it makes assurances about their immediate financial gain and protection, the things that really make a difference are technological know-how, network utilization skills, and institutional trust. When one stands back and considers the larger picture, they can see a fascinating change in the banking sector for cryptocurrencies. The interest that businesses are shown in XRP